Good evening, everyone. Thank you so much for joining me for tonight's webinar. My name is Megan Noon, and I work for New Hampshire Federal Credit Union Centers for Finance and Education. And tonight we're going to be talking about different types of equity loans and how they work. If you have any questions after this broadcast is completed, please reach out to us. We can be reached by phone at 603-224-7731. You can also go to our website, which is www.nhfcu.org. If you go to the borrowing tab and then down to equity loans, you will see all of the information that I'm going to be speaking about tonight and more. And right on our website as well, again, the www.nhfcu.org, you'll see the apply tab, and that is how you can go ahead and apply for an equity loan. You can also give us a call, and I'm going to go into all the different things about applying, etc., coming up next. So for starters, what is a home equity loan? It is a loan that you take out against the equity that you have in your home. So it sounds as simple as that, but I always try to start off step one here. Why is now a great time to get an equity loan? Well, housing values have been high for going on 3 or 4 years now. They've been steadily climbing. So many people may have more equity in their homes now than they ever have before. I know that is the case with me. Back in 2018, when I was selling real estate and sold the identical condo to myself, that's literally right next door. The condo was worth in 2018 about $210,000. I recently got an alert from the company that did my previous mortgage refinance. My condo is now worth close to $380,000. So that's quite an increase in 5 years. Interest rates for home equity loans are typically lower than personal loan rates, and just as important, if not even more so, than the interest rates being lower is that the term is longer. And what that means for all of you out there is that you're able to borrow larger of a balance for less of a monthly payment. So that is one of the reasons that many people choose to do an equity loan. For whatever their reasons are, they want to do it. But, if you think about just basic math, if I had the same interest rate for a $10,000 loan that I had to pay off in 5 years versus same interest rate for a loan that I had to pay off over 10 years, obviously the shorter term will make for a higher payment. The longer the term, the less of a payment. So that's the huge value of home equity lines. So I've gone into some of this already. The interest rates are low, the terms are longer. That equals to low payments. There's also typically no or low closing costs with home equity loans. New Hampshire Federal Credit Union does not charge closing costs on home equity loan. We do have one stipulation there, or there's one stipulation there I'm going to make you aware of later on in this broadcast. So a very popular question that I get when I start talking to people about home equity loans is them asking me, well, how much can I get? How much equity do I have in my home? How does that work? So the first thing you need to do is figure out how much your home is worth. And if you don't know, here are some ways that you can figure this out. The true way that we're going to figure it out might be a little bit different than what I'm going to give you now, but this at least will give you a general idea. You can go on Zillow. That is probably the most popular search engine as far as figuring out home values. If you're like me and you've refinanced in the past, and monthly I get sent a link that tells me, what my home is worth now. So obviously there's other ways to do it other than that. You can also look at what your city or town has your home assessed at. But again, I typically would start with Zillow. Knowing Zillow can be a little bit inflated, but at least it gives us a general idea. And then how much do you owe? So for that, you would have to figure out what your mortgage balance is, as well as the balance on any equity loans that you currently have. And you could just simply go online or go to that bank or credit union or mortgage company, reach out to them, call them, and figure out what your balance is. And for this case, it would be any mortgages you have and any equity lines that you have. Also, if you have any liens on your property, tax liens, etc., that's good information to know how much they are as well. Loan to value. So the acronym for this is LTV. You might see this all over the place when you start looking at these types of products. Essentially, what you need to know for the purpose of New Hampshire Federal Credit Union is, in order for us to figure out what your loan to value is, in order for us to figure out how much we could lend to you in a home equity loan, this is what you're going to do. You're going to take how much your home is worth. So let's say in this case, just for simple numbers, my home is worth $500,000. And let's also say that I have a mortgage balance of $100,000. Go me. So that leaves me with $400,000. Then I'm going to multiply 400,000 times 80%. That is the target amount that we can lend up to. And that's going to give me a $320,000 figure. That means in this particular circumstance, we took my $500,000 home, we subtracted my $1,000 mortgage balance, we multiplied that by 80%, and it gave me up to $320,000. So that's simple math you can do to figure out how much equity you have in your home. So some general information about home equity lines of credit. Excuse me, I keep saying that. Some general information about home equity loans here at New Hampshire Federal Credit Union before I get into the two different types of products we have. Your turnaround time is roughly 3 weeks, and that's from start to finish. The clock will start when you apply and are approved, and there's going to be several things that you'll need to get to us. Once we know that you're approved, one of our fantastic representatives will reach out to you and let you know that. And they'll also let you know what other documentation you're going to need to provide us. Examples of things that you might need to provide us are copies of pay stubs, tax returns, mortgage statements, things of that nature. When I say the 3-week turnaround time, a lot of that depends on you out there, the borrower. So if you get a call on a Monday of the things that we need, you get that all to us by, Tuesday, Wednesday, Thursday. We're going to be on good track to get this closed in the 3-week timeline. If it takes you 2 weeks to get us the information we need, unfortunately, there'll probably be a delay. So just know that that is one of the pieces, is the onus is on you folks. For all of our different equities products that we have, the minimum that you can apply for is $25,000. The maximum is $400,000. If you are applying for a home equity line of credit, the minimum is $25,000 that you need to apply for, but you don't need to use $25,000. That's just what you need to apply for as far as the line itself goes. And I'm going to explain that a little bit better in a few minutes. At this time, we do not have any closing costs for any of our home equity products. However, if you end up paying off and closing your home equity loan within 3 years, you will have to pay back your closing costs, which typically are in the $900 range, and that's just an estimate based on what it could be. That exact figure will be in your closing documents, and the person that does your loan closing will go over this with you. So just to repeat that, if you take out a home equity line of credit and you decide in 2 years that you don't want it anymore and you close it out, you would need to pay us back the closing costs. If in 2 years you've paid off the balance in full, but you don't close it out, that is totally fine. So there's 2 different types of equity loans that we currently have here at New Hampshire Federal Credit Union. I'm going to touch base with you on tonight. The first is home equity line of credit. which is also referred to as a HELOC. And then we also have a lump sum equity loan that I'm going to get into the basics of. Again, for all of both types of equity loans, if you go onto our website, www.nhfcu.org, you go to the borrower tab and then go down on equity loans, you're going to see all of this information. So the home equity line of credit, your interest rate for this is not based on your credit score. You're either going to be approved or declined. And your interest rate for the HELOC is a variable interest rate that is completely tied to prime. So our interest rate is going to be prime plus 0. So it's whatever prime is plus 0. The plus 0 might seem a little strange for me to say that. Why not say just prime? But many other types of organizations have different structures for their interest rates, such as prime plus 1 or prime plus 2. So definitely prime plus 0 is way better than prime plus 1 or plus 2. A home equity line of credit is literally a line of credit like a credit card. It's there for you when you need it. Your payment amount is going to be based on the balance that you've used and not the line of credit itself, which is really, really awesome. So just to talk that out, if I applied and was approved for a $50,000 line of credit, and I took out $15,000 of that to replace my roof, my balance, my payment is going to be based on the $15,000 that is currently my balance that I am using. Has nothing to do with the $50,000, only on the amount that I am using. So that is just want to make sure that was clear. And like I mentioned, no closing costs unless you pay it off and close it within the 3-year mark. So the loan to value, as I mentioned before, that we can go up to is 80%. So if you're looking for the home equity line of credit, again, you'd figure out your equity, how much equity you have using the amount of your mortgage, also an existing equity loan that you have, amount of any mortgages or existing equity loans that you have, minus the amount that what your home is worth, minus the amount of any mortgages or equity loans that you have, times 80%, that gives you your loan to value dollar amount. And like with most or any other home equity lines of credit that you see out there, they basically work in a 20-year period, which is split up into 2 10-year parts. So the first 10 years is called your draw period. And the great thing about that is not only are you just making payments on the balance that you're using, but it's interest only, which is great. Your next 10 years are what we call the repayment period, where you're going to be paying back principal plus interest for the balance that you have. We do not have any prepayment penalties. So if you, again, have accessed $15,000 to buy a new roof, and you end up paying that back within 3 years, that's awesome. Good for you. Again, you can pay things back as quickly as you want to, as we have no prepayment penalties for our equity loans, or any of our other loans for that matter. So this is hugely important and a huge selling feature of our home equity line of credit. So I mentioned the interest rate is prime plus 0. However, for the first 12 months, we are currently offering 3.99%, again, for the first 12 months. 3.99% is well below prime. This is an excellent interest rate. So if you're contemplating doing a home equity line of credit because you are thinking, at some point I'm going to replace my heating system. I have a few credit cards that have high interest rates. I'm thinking about doing a home equity loan for a debt consolidation, or, I really want to put in a new deck. Should I do it now? Should I wait? If you have things you need to do or want to do and you're contemplating when to do them, the 3.99 for 12 months is a really good way to get this debt paid off quicker than if you're just having an interest rate of prime plus 0. So I would highly recommend, if you have anything you have to do, or you're even thinking, I have to do this at some point, now would be a really great time to do it, to take advantage of this awesome interest rate. And if you have any questions about this or anything else, again, please give us a call, 603-224-7731. So as mentioned earlier, the home values are really high right now, and they have been, and they haven't really gone down at all. But at some point, this is going to have to stop, right? I don't know when that point is, but at some point, this is going to have to stop, and home value is going to start going down. So that's why I recommend to people, now is a good time to secure the line so that you have it to use later. That's what I have done. I have no immediate uses for my home equity line of credit, but I always had one as a homeowner, because as all of you that are homeowners out there can attest to, emergencies and such things we need to fix or replace or what have you, build, they always seem to happen at the worst possible time, like right around the holidays, or like your heating system blows in like the middle of a snowstorm, things like that. So that's why I like to have the home equity line of credit ready for me to be able to access instantly if I need to. And for those of you that also have checking accounts here at New Hampshire Federal Credit Union, we always advise folks to have a checking account with us, because what we can do, you can do this on your own via online banking, or you can call us or come in and we can do it for you. But say you have a home equity line of credit and you need $10,000 in a check tomorrow to pay someone or to put a down payment down on something. You would be able to go onto our online banking, transfer $10,000 from your HELOC to your checking account, and then boom, it's available instantaneously for you to be able to write a check out of, or what have you. So that's our home equity line of credit, the HELOC product. So that's one product that we have here at New Hampshire Federal. The second one is another great product called, I don't really know what it's called, but this is how I refer to it, the lump sum equity loan. And the reason I refer to it as that is because you get the entire amount up front. Unlike the home equity line of credit, where you have a line that you can tap into it when and if you're ready for whatever amount of money that you need. The lump sum product, say you needed $30,000 for home improvements, you would do, when you close on the loan, you'd get a check for $30,000. You're going to get the whole amount up front. It is a fixed rate product, which is nice. A lot of people, and I understand why, are very hesitant to want to do anything that is a variable rate. Goodness knows, how rates can fluctuate and so on and so forth. So again, for those of you that would like a fixed rate product, this could be the product for you. The interest rate is going to depend on several different factors, and the first factor is credit score. So for the home equity line of credit, your credit score does not set your interest rate. For our lump sum equity loan, it does. So that is going to be the first factor. The second factor that I'm going to talk about is your lien position. What does that mean? So if you do not have a mortgage or another equity loan on your property currently, that means that this loan would be in first position, because there's no other mortgages or equity loans that came first that you currently have a balance on. So that would be first position. Second position would be, I have a mortgage. I don't have another equity loan, but I have a mortgage. So in that case, would be in second position. So we have different rates based upon, again, all of these different factors, lien position being one of them. The third factor is the term that you choose. So remember, this is a fixed rate, whole amount upfront product. So you might decide that, okay, I can help you do the math and figure out, like, all right, like I can really afford like $300 a month, or I want this done and paid off in 5 years. So again, based on those different factors there, you'll figure out what your payment is. It's going to be based on your rate. It's going to be based on the term that you choose. And the rate is also going to be dependent upon the term that you choose. Loan to value is another factor. So when we do your loan to value, if it is depending upon that, we will also be able to determine your rate. And again, if you go to our website, www.nhfcu.org, go to the borrowing tab and down to equity, and you scroll down to the lump sum equity product, you're going to see this chart and you'll understand what I mean with these factors. And if you have any questions, please give me a call, 603-224-7731. We have no closing costs on the lump sum equity loan, unless, of course, as I've previously mentioned, that you pay it off and close it within 3 years. And again, with this, you're going to set the term, and the term will help set your payment along with the interest rate. So this is really nice for budgeting purposes as well. If you're going, geez, I don't know what this interest rate or what everything's going to go up to. I really can't afford more than $300 a month. Perfect. You can actually set this up front, figuring out what term that you'd like best, what term you can qualify for in order to get that payment in the range, hopeful range that you need it to be. So how do you apply for a home equity loan? Well, you can do it in several different ways. You can go into any of our branches and apply. Our branches are located in Concord at 70 Airport Road, as well as 71 Calif Highway in Lee. You can go online and apply on our website. And again, if you go to www.nhfcu.org, you'll see a button that says apply, and you'll be able to click right on that. If you don't see that button, you can go to the borrowing tab and equity loans, and somewhere in that field there, you'll see an apply button. Whether you apply over the phone or in person or online, it's going to be sent to the underwriters, and you should receive a decision the same day. If you apply at 4:59 or at 6 o'clock, then you won't receive it that day. You'll probably receive it the next day. But that's always our goal, is to have a decision the same day. Most likely what will happen is once one of the employees gets your loan file sent to them after it's been decisioned, you're going to have one or two answers potentially. You're going to have declined, which unfortunately means we can't do a home equity loan for you at this time. And the employee that calls you will be able to tell you why it was declined. Or you'll have it, the setting will be approved pending. And what approved pending means is that, yeah, we're ready to approve it. Like, it looks good. You're approved. However, we need to verify that the amount that you make, your income, is what you say it is. We need to verify that your mortgage balance is what it is. We need to verify that when we do an appraisal of some kind, that your appraisal is going to come in at the value that you believe your home is worth. So all of this is the reason that it's approved pending. Once we know that your loan is approved pending, we're going to reach out to you. Actually, we'll reach out to you either way. But when we reach out to you because your loan's been approved, one of the things that we're going to talk about is the next steps. And this is going to be things you're going to need to get to us. And as I mentioned previously, the 3-week turnaround time, the quicker you can get items to us, that'll help us meet that deadline. And once we have everything and satisfied all the requirements and your loan is ready to close, that closing will be done in either the Concord office or the Lee office. That is your choice. The time is your choice. The day is your choice. We can do closings on Saturdays. That's absolutely fine. And again, we'll go into all those details. The rep will once they contact you. So that is the end of tonight's presentation. If you have any questions, again, please give us a call at 603-224-7731. And thank you so much for joining me. I hope this was helpful and look forward to seeing you on a future webinar. Take care. Bye-bye.